Hello, everyone. Welcome to Smart Investing. I'm Albert, host of the channel, and today we're going to be doing the banking services sector. So, I only have about 5 stocks for you today. So, we're going to go over technicals, fundamentals, and some quants. First stock that I have up is FMAO, Farmers and Merchants Bank Corp. Going to take a look at that. So we have a $350 million market cap. And if you have not seen my videos before, if this is the first time you're seeing my videos, so what I do is I go over companies just to see if they are good for a watch list. So we go over companies and we see if they're a good fit to add to a portfolio. And I just either say yes or no if they're a good company. And that's pretty much it. And then you will see how I add it on if it needs to be added on. I just pretty much give a check to add to a watch list, or I put an X at the end of the video to see if it's not a good company. So, first things up, this is my first page. And I'm just looking at all this information here. And I'm pretty much just looking at it just to see what I like, what I don't like. And for the majority of it, just to see if anything is out of place, if anything's like way off, that doesn't seem right. I will point it out and I'll see what's good and what's not as well. So, market cap is pretty low. 52-week high of 42 and 52-week low of 22. That's a decent range, especially for this year for 2022. And again, most of the year is pretty much done, so we only have 3 months left. So now I'm looking at the PE. That's a fair PE, slightly undervalued. That's pretty decent. And the dividend, I don't really look at yields. That doesn't really matter to me. And what else am I looking at? The shares here. So out of 13 million shares, 11 are still left over and available. So the only issue that I think I'm not too crazy about is that, which is a market cap. The volume could be a little bit better. I'm a little bit iffy about it. So I'm actually gonna say no to that. Everything else looks like it checks out. So for the most part, a first page, pretty decent. Pretty decent. Now we're gonna look at some technicals. So I'm using the 5 year. Because obviously 2021 was a monster year, and most of 2020, and then you have 2018 and 2019 were pretty decent years. I mean, they were good. They were good. I wouldn't say the very best, but they were pretty good. And even prior years before that. So we're still gonna look at this 5 year chart. Gonna see if there's anything. So we're right about here, and that's about 27. So the next lower point is about 23. So other than that, the low for the past 5 years is around 19. That's not a big difference from 19 to the price right now, 27. So I don't like that spread. I don't like that difference uh of numbers. I want something a little bit more of a wider spread. So the fundamentals are okay. I guess they'll pass. And then the technicals, for my analysis, I say they failed. So we're gonna see the quant rating. They ranked it a 9.3 for momentum. So I want to see what that's about, because I definitely do not see any momentum. We're gonna look at the company and some results here real quick. So we have here the earnings are actually growing, which I get because banks are charging a higher interest rate in order for people to borrow money, so they get more money in return. So we have here, okay, mid 80s to so we have mid 80s, higher 80s. That's pretty normal. So let's look at the other indicators. Not bad on return on equity, not bad. So now we're gonna look at the income statement. Let's be sure it's annual. Revenue and operating income is not giving me, but still one of the most important features to look at on this app. So we have the income statement. So we're looking at the net income. It has grown significantly. So I think that's why I do see the growth, which is the income. And one would think the market cap. So it all just depends what they're doing with their money. Are they buying back shares, or we just don't know. Again, if you want to figure more about this, you could always look at the news on this company, and I'm not gonna go over that and bore you with the words and statements and all that. I like to look at solid evidence and mainly just numbers and bars and lines and graphs and all that. It's just more interesting to look at and more visually pleasing as well. So, looking at the cash flow, I just want to see if they're cash flow positive or negative. So, we have 34. So, they are cash flow positive. They are cash flow positive by about 5 million. So they can definitely afford the dividend, plus their net income is 23 million. So we're looking at about 28 million in total return that is left over. So that's definitely a positive sign. So we can see here, let's go back to 2020. Did they cut the dividend? And they did not, which is a good sign. So we have here 16 cents, 16 cents, 17, 17, 17, 17. Then we have 20 cents. Sorry. So we have 20 cents special dividend, two payments in July of 2022. So that was actually an extra payment, which is pretty cool. Last split that they had was in 2017. That's pretty frequent. That's pretty recent. I just hope it doesn't become frequent. That's what I was gonna say. So that's pretty much it. So yes or no to this stock? Uh, Let me read about them real quick, and we can see. So I'll say this. Uh, it's a decent stock. If you're looking at this for income, this is not the one. If you're looking at this to maybe day trade or something, I would say no. Or if you're looking at this as a growth company, no. Um, I'm gonna say no. It's a decent stock. it's I'm neutral about it. The reason I say no is because it needs a little bit of work. They are on the right path though, and they are profitable, which is very very important, and they are paying dividends. Uh, I just want to see this increase a little bit. I know we're in a downtrend, but hopefully, when things get better, I want to see if people are interested in this stock. So I would need to see a wider spread on this, definitely, and more volume as well. And then just better numbers slowly gaining. But they do have the fundamentals to back it up, though. I will give them that. So, really, like I said, I'm neutral on this company, but I'm not like leaning yes or no. But if I had to choose, I say no for this year. So next stock up that I have OVBC. So with looking at technicals right away, I don't like it. $120 million market cap stock. They are profitable. The spreads I don't like. Total dividend I don't like either. I could tell right off the bat, not too crazy about it. Excuse me. So, highest rating for the quant was momentum 7.16. Volume was at 22K. So now we're gonna look at the indicators here, key indicators. So another decent stock, but it needs a little work. It needs a little bit of work, and I'm still not getting uh, any info. And this has been going on for months. No info on revenue or operating income. I think I might understand why, and maybe it's because this year has not ended, and we're still in 2022. But then also, if that was the case, they should give me information uh, for years prior to that. So before 2022, but it's not showing me anything. So we're gonna move on to the next key factors here. So we're looking at debt, pretty much the percentage and the increases. So slightly went down, then it started to go up again with their debt. I didn't like that. And it went slightly up again. That's pretty bad. So uh, just with that alone, it doesn't look good. So right away, I'm just gonna say no, whether they cash flow positive or not. Uh, yeah. So they are cash flow positive, and they have 13 million left over, and that's not including the net income. So these guys can definitely afford to pay dividends. Definitely. Just by looking at it. So they don't pay rising dividends because if you look at that, it's been 21 cents for at least the past 3 years. So that's not a good sign. And they had two splits. So it's almost one every decade. Definitely not a good sign. So for this company, I'm going to say no as well. Next one up that we have is WSFS. So with WSFS, already looking at the 5 year, I don't like that chart. Technicals already failed. It just looks flat, you know? Definitely looks flat. You don't see an uptrend, or you don't really see it holding up. I mean, you sort of see it holding up, but again, the spreads for that company or for the companies. So we have here 2.89 billion. The spread I like. That's a nice spread. And then that's pretty decent volume actually. The dividend is kind of low. it is kind of low compared to their peers. They are more profitable than other banks. So this is the kind of start that I'm looking for. A bigger spread. Dividend, it don't matter. You just want more volume, which they got. And also, they're a $2.89 billion company. So I don't know how they grew, but they're managing money the right way. That's what it looks like based off of the numbers that I see. And the data's backing that up. So now we're looking at the quants. So now we have here the highest rating that received was for momentum. I can sort of agree with that because the stock is holding up. But again, it's not going to gain much either, even if it did. So at $45.52, we're going to compare that with the 52-week high. So if we subtract $45, let's round it off to 46. So we're looking at a $10 difference. So with that $10 difference for the year, well, not for the year, but up until now, and it's lost at least $10. Uh, we'll just have to wait and see what happens and see if it, will go up eventually, and if the volume can still keep pace with the timing. So as time goes on, hopefully we can keep that volume. So for this stock, I'm gonna say yes for this stock because it was a little bit better. The spreads are better for the year, and then also, you know, the earnings kind of dropped for 2022, but then, sorry, the end of 2021, and then starting to go up in 2022. So they do have some work, but it's not as bad as I thought. So next one up is FCBC, First Community Bank. This stock seems to be holding up. So I do like the technicals on it. So looking at the first page right away, very undervalued. Dividend, it's better than, I'd say it's average, probably slightly above average. If you're looking for this as an income portfolio, I don't really like it, but it looks like they're paying better than, a little bit more than some companies. I say slightly above average. So we have dividend payment of 1.16. They are positive. Market cap is really low, so hopefully they have time to pay off their debts. So 52-week high and low, that is about a $10 difference. They need work. They definitely need to work on that. And so the chart is flat as well from $28 to, let's say, 18. That's a $10 loss. So you would expect a $10 gain. Some things don't work that way. You lose so much that you might want to try and hope you get half of your money back or something, but it just, sometimes you gotta cut your losses because things keep getting worse, and then hopefully you learn from that mistake. So quality was the highest rating for this. So that was at a 6.5. So as for quality, they must be doing something right. Are they in the banking? Okay, because maybe they might be in the consumer crediting and all that. So it doesn't look like anything special that they do, anything a little bit different than some other companies. So typical bank stuff, different, they want people to open savings accounts or checking, whatever the hell banks do, aside from sending out loans and try to make everything, high and jolly when they're really sometimes screwing you up as well. So the dividends we'll look at. So only a 2-cent share, and then in 2020, the cutoff line. That's the cutoff line. So 25 to 27. Everything else was like 25. Wow. Looks like this company does not like giving raises. So we're just gonna look at the other indicators here. So we have, let's see here. The bar charts and all that looks okay. Looks like they're holding up. So that obviously is going to be above 80. They all are. Like, who isn't? Net income has grown drastically in 2022. So as for the balance sheet, they have that at 2.77 billion, and their asset is over 3 billion. Cash flow, I'm gonna look at that now. So are they positive or negative? They're actually positive. They're positive on their investments. Definitely good to know. So FCBC, Community Bank shares. Who knows what the future holds? Let me just look at the. Did they pay or cut anything? So this is a company I'm gonna say no to for now. They seem okay. So for this stock, I'm gonna say no. It needs more volume, and the 52-week high and low, I don't see it there. And then yes, they're cash flow positive, definitely a positive, but for now, I'm gonna say no. It needs a little bit of work, just a wee bit more. Last one up is MGYR Magyar Bancorp. Awful range for the 52-week high and low. Market cap is only at $88 million. They are profitable, so that's a good sign. Only 12 cents for a dividend, and even then, the yield is low. So income, definitely not. This is definitely not a stock for the long term or anything like that. Volume is awful. Like I said, their earnings are positive, but that range is just awful. So I'm definitely going to say no for that company in that one. So that's pretty much it. Thank you guys for watching, and I'll see you guys in the next one. I'm gonna make a short video after this. So again, stay tuned. Take care and have a good weekend, you guys.